So my strategy over the next 5 years in VET and VeChain is to do nothing and just wait. I know that it's a little complex and even a bit daring, but if it's what I have to do, then well... I'm only joking, but even though it may seem boring, to say that I'm just going to wait, sometimes it's the best course of action, and sometimes less really is more. A quote which has grown to be one of my favorites in recent years is that I'd rather be a relaxed person with moderate gains than a busy fool. In other words, somebody who is undertaking a lot of activity but isn't actually accomplishing anything useful. As a long-term investor, I don't see my job as having to time the market's ups and downs on a daily basis or trying to predict next week's price. I feel that my job is to identify undervalued projects or businesses with good earning prospects, which are managed by competent and honest people who are experts in their field. Whenever I'm making a bet on an investment, in this case VeChain, I'm primarily concerned with trying to figure out the future adoption and growth, and therefore the earning power, and also that the people running the show know what they're doing. And what's even more important than being competent is being honest and trustworthy. You don't want somebody to be clever if they aren't honest, because they'll be more likely to be able to deceive you, and that's why I for one never invest into any project or stock when I feel that the management aren't honest or treat investors unfairly. Also, if you're enjoying the video so far and you like what you're hearing, do me a favor and subscribe to the channel so that we can keep growing and I can spend more time bringing videos to you guys. Personally, because of my strategy being an income-orientated investor, I only really invest into crypto projects which provide an income which I believe will grow over time. In the case of VeChain, we have the Dividend, and although the dividend is fairly modest at somewhere around 2% per year, I can live with it because of the potential growth which I think will be realized over time. And you'd be amazed at how many investors simply overlook the benefits of slow compounding over time, because even with a relatively modest dividend yield like 2% per year, when the asset is one which has a good chance of long-term appreciation in value, the prospects are amazing. I own 1 million units of VET, and at the current rate of about 2% per year, my Dividend will increase my portfolio by around 10% over a 5-year period, maybe just above because of the effects of compounding. And that may not sound like a lot, but remember that the whole reason that I'm accepting a low 2% dividend is because I think that appreciation will more than compensate for the low yield. And so let's say that VET increases in value by 10 times over the next 5 years, which I actually think is fairly conservative considering the potential and actually the success which VeChain have already realized. But still, let's say that each unit of VET is worth around 10 times more than the current market value at the end of the 5-year period. Now, even though with a low 2% annual dividend I'd get a growth of just 10% or so over that 5-year period, because each unit of VET is worth in this example 10 times more than the current market value, just that 10% that I'd gain through dividends would be worth 100% of my current holding value. So actually, because I think that the potential for price appreciation is good over the coming 5 years, even a low dividend will make a huge difference to the final outcome, assuming that I'm right. And hey, I could be wrong about VeChain. I mean, of course, I think that I'm right, or I wouldn't be investing otherwise. But the truth is, like every other investor, I make mistakes, and that's why diversification is so important. I also invest into the stock market and real estate, or property as we call it here in the UK, and other cryptos as well, as I believe that the more sound investments an investor has in their portfolio, the greater is their insurance policy about being wrong in individual stocks or cryptos. And that's why whenever an investor asks me whether I think that diversification is necessary, I tell them that it is because it's an insurance policy about being wrong, and every investor over a career will be wrong from time to time, and that's just the way that things go. Anyway, that's it for this video. If you enjoyed, remember to subscribe for more content like this. Also, remember that I'm not a financial advisor and that this video is not financial advice. Thanks for watching.